Okay guys, so we're going to go over the higher time frame VWAPs in this section. I've put weekly in brackets. It doesn't matter, okay? We're going to go through monthly, quarterly, yearly, but very briefly. In fact, this is pretty much the section for all higher time frame VWAPs, and you'll see why that is. At least in terms of me putting anything on a slide. Just consider this to be pretty much identical for, sorry, let me just change the color here. I'm sure you guys all know I love my pink color. So weekly, monthly, quarterly, yearly, okay? What I'm about to tell you in this slide, and pretty much through the examples we're going to do, it applies to all of them. So we'll obviously look at monthly, quarterly, yearly, don't worry. But in terms of the actual theory or, off the chart work, this is it. Just to repeat the point, this is the higher time frame VWAP sort of slide section, okay? I've just put weekly here because it makes sense. Otherwise, I'll have weekly, monthly, quarterly all on one slide. It's going to be all over the place. And as you'll see, the principle is exactly the same, all right? So firstly, you can see I do use all the bands, right? So you can see here. So there's two issues here. Forget about this sort of rectangle with the shading in it. We'll come to that. Basically, with the higher time frame VWAPs, we're looking at both dynamic stroke developing, which you've been used to doing, but I mentioned it in the static section, that we're also going to use this to give us some static values similar to our composite levels using historical VWAPs that have finished for the session, okay? But rather than do it all together and confuse matters, let's just look at it one by one. So again, we're going to split this out into, I'm just going to put D, okay? You know it by now. Dynamic, developing, And then I'm going to come to S, static. Okay, so with this, in fact, let's just put DVA, developing value area. You only know that this is a weekly because I've told you that, right? My point is, from a sort of VWAP, approach that I'm looking at, there's no difference. It's market condition, okay, and rhythm. So the danger is that I keep going on and I confuse matters. It's not. Keep it basic. Just continue to do exactly what you've been doing with the day VWAP, but with the weekly VWAP. This is why I said in the last section, don't get into all of that. Oh, I wonder who it is. Just know that it's bigger guys. I mean, roughly speaking, in fact, let's look at it and we'll come back to that point. What have we been doing so far? We've just been looking at approximate, market condition. It's imbalanced up till there, right? And it's obviously bounced at the VWAP, and then what? It's gone rotational here, right? At this stage where it's kind of, bounced, and then here we've started to build value underneath where the rhythm is, right? And it's gone rotational, and then it's gone down the other side. But here's my point. This is why it's so important to look at this stuff, because at the moment, forget about, again, the static part. We're just looking at developing value. No different to, so for example, you might be, what should we say? You could be here in the day, right? This hasn't happened yet. You can clearly see the market's imbalanced. The danger is you come in, right? Your overnight session is here. Think about it. This is ETH, right? These are just the ETH closes, 1800 hours. The market's gone up. Can you see on your day chart? I don't have it here. You don't need to have it here. You can see you're going to be imbalanced down, aren't you, with your VWAPs going down. Terrible drawing. Let me do that again. If we draw, don't forget, this is a weekly. So this section here is going to be your overnight on a day VWAP. So let's think about how that's going to look. well, it's going to be something like, it's quite aggressive selling, isn't it? So it's going to be what? The market's going to be like that. And my point was, even though I didn't draw it very well, your VWAP's going to be pretty aggressively down, and your bands are going to be like that, right? I mean, literally, it was that steep, the selling. Now, let's say you might have had some sort of CVA in here. There, that's your CVA L. I'm just saying hypothetically, that's your CVA high, right? You know, we've been drawing these, and it could be from somewhere out here. We don't know. Some sort of huge distribution from last week. Who knows? Last week, 2 weeks ago, who knows? Right, so that's a combined profile. Again, I don't know what's going on today, the drawings. This is a merged profile, and then, you know, you're extending it out. So if you were coming in here, can you see you'd be breaking your CVAL, and you might be looking for a breakout pullback, and this would be imbalanced. Your DVA is imbalanced, and essentially it's giving you short opportunities, isn't it? But look, all right, fine, the rhythm is sort of this normal trend, but look what's happening. You know, you're bouncing straight off the weekly VWAP. You don't want to be trading into your VWAP. It's, you know, you're just asking for trouble. Basically, what have you done? You've just come back to the mean. You know, it's going to have a high probability of bouncing. So my point is, even though on what I've been showing you so far, just looking at it from a what? And in fact, let me just go back to this. So remember this DVA. This is just looking at it from what? Day traders, scalpers, locals, and so on and so forth. This is what now here? Probably swing traders, medium term, you know, like any sort of hedge funds or whoever employing swing strategies. They're gonna, do you see our day has started here? Our day VWAP doesn't take into account this huge lump of buying that's just happened. Clearly, as it retraces, it's a swing, isn't it? And we can see that because it's come back to, you know, ideally, obviously, it would have just sort of bounced here at the sort of rhythm. But look, markets aren't perfect. At the end of the day, it is imbalanced in the sense that it's building a lot of value above the whole. My point is, we talked about this when we did the day VWAP. We said, you know, if you've got your VWAP here and the market is pretty much above it the whole time, how can you even say that's anything but imbalanced? The entire volume for the entire day, this is the week, it's just a period. Don't think day, week, month, the period that in question, the whole time it's above the VWAP. You don't want to be shorting into the VWAP, right? I hope you can see that. You're going to get murdered like 90% of the time. You might get lucky and it breaks, but nah, you're going to get murdered if you trade into the VWAP when you've been above the VWAP the entire time. So hopefully it's just logical, right? Basically, you're imbalanced. You're coming in, you've broke your CVAL, you're thinking, oh, breakout pullback, DVA is imbalanced, let me get short. No, don't get short. Why? Because of these guys, the swing. And what I'm going to do is I'm just going to remind you of that. Let's go back one. There you go. And I don't want to write because obviously it's going to bring all the stuff from the previous slide in. So let me just point it out here. So these guys here, swing traders, possible hedge funds, using the weekly VWAP, trying to take what? Trades over a day, 2 days, multi-day, but very sort of intra-week swings, right? If you've had a big up move on Monday, Tuesday, and it retraces, you know, second half of Tuesday, some part of Tuesday, bang, they're just going to hit the market and look for continuation. And that's what's happening. But these guys, day traders, scalpers, locals, they might be using the day VWAP to do what? Get short. You've got to realize that it's a combination of things going on there. And that's why when you get into this, what options have you got? You can get long, right? you probably don't want to get long because you are going into a DVA imbalance on your day intraday. So clearly you just want to wait for it to pop back above CVAL and then what? Get your RPB. And now look, you've got your swing guys on your side. You've got your, probably this would have turned by now, right? And you know, the imbalance down would have failed and we may have started to build some value above maybe one of these standard deviation bands, and you start to turn. Okay, so you start to go imbalance up, you start to build some rhythm, and then you know you're above the CVAL as well, so you've got acceptance above here. So in terms of, you know, we said it here, the CVA, that's the point. Okay, at the end of the day, you can now start to use the extra. You see all this information here. We weren't using it, were we? We weren't using Monday if you come in on a Tuesday. Let's look at it, one more example. You'll see it's all over the place, exactly the same thing. Sorry, I didn't mean to do that. Just get rid of this. Just give me a second. Basically, we're just taking into account the whole week, right? On a Monday, it's not going to matter because on a Monday, the VWAP on the week and the VWAP on the day are going to be the same, right? Because on a Monday, we haven't even had 2 days. We've had 1 day. So they're going to match. Okay, so always remember that. This is the day VWAP until Tuesday. Because on Tuesday, the day VWAP probably reset up here somewhere, didn't it? At 1800. And then started doing this. And look, this just continued because it takes into account the Monday as well. Hopefully that's clear. Keep doing that, sorry. Okay, so let's just move forward and look at another day. Okay, so you've got, you know, you've got plenty of examples here. You've got, you know, the market's gone rotational, but then it kind of maintains this sort of rhythm. So when you come in here, look, it's tested it once, tested it twice. That's a normal trend. Would you agree? Right? I'm not saying you might be trading this late in the session, but who cares? This could happen in the morning. This could happen any time of day, even here. I mean, then maybe not necessarily because you haven't really established the normal trend. I would say more like either there or there. Think about it. You might have again, as we said, composite coming across. That's your CVA high. And if you think about it, how's your VWAP going to look? Look, it started here, 1800. Guys, your price is going to be going up, right? Terrible drawing, but you get the picture. That's going to be your VWAP. That's your standard deviation bands, right? So your thesis is going to be DVA, imbalance up, CVA, yep, breakout, pullback above what? This line, right here. And look what's going to happen. You're going straight into the normal trend. This is my point. Now what you can start doing is you can have that as your day thesis for the day developing value area. Obviously the CVA, keep it separately. You can have your, now you can start having your week. So in fact, a better way of doing this, what I want you to start doing, and don't worry, we're going to do some examples, is I want you to have your day, I want you to have your week. Okay, same thing, DVA. What is it here? Normal trend. Do you see? So you've brought in an extra factor into your hypothesis, and then you can have CVA, same thing as before. Your line in the sand, and we'll discuss that a little bit further in terms of exactly how to play that, because at some stage, I think probably when I bring in the other VWAPs, but maybe I'll get you started in this section. In fact, I think I'll get you started in this section. It makes sense to bring it in now. It's coming. It's inevitable. You might as well start in this section where I'm going to change it up a bit. So your breakout pullback can, in theory, start here, and your return pullback can, in theory, start there. So you could look at getting short there with a view to getting back in from outside. We'll talk a little bit more about that later. So the point is, have your CVA thesis, but just have it separately, as you've been doing, line in the sand. But obviously now, in terms of breakout pullback, return pullback, we're going to add some complications into this now. And really the reality of the situation is, as you can see, it's a great area for swing traders to enter, right? You can see it. Market's been going down Tuesday, Wednesday. On Thursday morning, it backs up. Obviously, you're going to want to slam this thing down. The thing is, so far with what I've shown you, all we've seen is just a day, isn't it? So if you think about it, all we've been looking at is static value historically, but also just the day, right? That's all we've been looking at. Now what I'm saying is, let's bring in, sorry, terrible drawing, the week into the day. And as you can see, we're then going to bring in the month, we're then going to bring in the quarter, and we're going to bring in the year. So they're all going to be windows within each other, essentially, is what we're doing. Okay, let's have a look at one more actually, just so we can look. I'm not going to go over this with the monthly, quarterly, and yearly. It's exactly the same principle. Okay, I just look for market condition and rhythm, and I want to make sure that I'm not doing something against the market condition and rhythm of these guys. If we just remind ourselves, very roughly speaking, quarterly, yearly, monthly, there's going to be some overlap here. Monthly, okay, weekly, and then clearly day VWAP, not daily as in daily time frame, day, the intraday, right? As you've seen, 1800 to 1700, ETH or RTH, whatever you want to look at, right? So I just want to make sure that, as you saw, when it pulls back to rhythm of the weekly, and there's attractive propositions for swing traders, I'm not getting in the way. When the monthly pulls back, which you're going to see, I'm not getting in the way of these guys. We talked about this, where the market's kind of got the VWAP, and then maybe you've got some sort of normal trend going on. And then we said, when you're here, it's okay. When you pull back here, that move alone, we're on a big VWAP, can take a couple of weeks sometimes. When we get to this area, we don't want to be shorting into that, clearly. So, hopefully it's obvious. I think it's pretty logical. And then same thing with these guys, where you've got, major sort of yearly VWAPs, which we're going to look at. So hopefully that's clear. Let's go back to here, and we're going to look at one more example. Look, again, I know I keep saying it, but just imagine this was a monthly VWAP, yearly VWAP. At the moment, I'm just showing you that it doesn't matter what the VWAP is. I'm looking at it in the same way, right? So I'm looking at here, sort of market condition, sorry, for the week is what? Until we get there and it breaks and it goes rotational, and then the rotation kind of fails and then we go up. But ignoring that, point is, look at that, right? I mean, this is probably just the most perfect example you're going to get of why you have to look at all this stuff. Because what is going to happen here is, again, you may have a composite, right, that you've drawn in, and here you're saying, breakout, pullback of value, right? So you're breaking out a value, pullback. On your day, sort of intraday VWAP, would you agree? That's going to be short all day long. Look at it. That's where your day starts. That's all you're looking at. Can you see? Fatal error. You're completely ignoring what's happened on Monday. On Monday, it's gone up. When it pulls back, clearly swing traders are going to slam this thing. Obviously, it's not 100%, but very high chance. I don't fancy my odds, playing against that. If you want to do it, I ain't going to. I'm going to wait to see what happens, right? If it continues to break down and we start to go rotational, fine, I'll get involved short. But I'm not in the business of betting here, of a lot of like gambling. I take high probability bets, and at the probability is not on your side when you're basically shorting in this region, because as you can see, it's a pullback of a huge swing, and the VWAP sort of measures that perfectly because we've got the rhythm. You know this, right? The rhythm here is what? It's kind of a slow trend, isn't it? That's the 0.5. It's pulling back in. Guys, how is this going to look on a, the thesis you've been doing so far is going to be CVA less than XYZ, whatever this value is, who knows, who cares? At the end of the day, it's just a breakout pullback below that level, and you're going to have DVA is what? Imbalance, down. Would you agree? I hate drawing these things, and my drawings are terrible, but it's going to be something like that, isn't it? You can see it there. It's going down. That might be your VWAP, and I did warn you about my drawings. In fact, it's going to be much more aggressive than that, isn't it? Because it's so aggressive, that move down. It's going to be like a fast trend or something, potentially. So let's do that again. This here is this, right? So that's going to be your VWAP, and it's going to be more like that. You're going to be imbalanced down, basically. And do you know what? Do beg your pardon. No, that's right. That's right. It's probably a little bit steeper then, but you get the principle. It's going to be imbalanced down, right? You can't argue with that. This thing is going to be imbalanced down. The reason I just stopped for a second is actually the VWAP, technically it will start there, but who cares? You get the principle. DVA is imbalanced down. As this thing pulls back, you've got probably some acceptance below there, pulls back. You're going to get short. Look what's going to happen. Slam! The sort of swing traders are going to come in and they're going to blow you out the water. Why not wait for this to happen, turn around? My point is this, to go rotational, pull back, boom, now you've got your, because I said to you here, have your daily DVA, weekly developing value area, thesis is going to be what? At that time of day is going to be sort of like normal trend, slow trend. See, straight away you're going to know your thesis is what? If I pull into this area or even earlier, I'm looking for longs, right? I'm not looking for breakout pullback. So you can already cancel that in your thesis. That's my point. According to what's going on in the weekly. This is where you got to learn to be a little bit dynamic and obviously watch to see what happens when you start to break down in this area. Is, you're waiting to see, do we actually break, fail below the CVA low? If we do, go up. You got to write this out, your thesis. The reason I'm not writing out in any particular way is because, like I said, I hope you can see my approach to markets is very loose. Okay, if I get you being very specific about things, it's going to become like an indicator. You need to snap out of that. The reason I say this, because I don't want you to think, envy is a little bit, it's not very sort of organized. Look, guys, I'm going to be honest with you. My desk is a mess. All right, I'm going to be 100% frank with you. All right, it's not that bad, but I don't have any sort of let me do this, let me be methodical about this and that. I'll do a journaling section, and I'm going to give you some ideas, but I'm intentionally doing it slightly differently than what I was told to do. It just is too rigid. All of that stuff where you say, if A plus B happens, this happens. No, just know, okay, that on the weekly, at this stage, we're at a normal trend. Keep it simple. I've put it here. Weekly, DVA, be aware of normal trend, slow trend. You can even put the approximate level, or you can just mark it here. Or just, like I said, make a note of it. That's it, and then keep it in your mind. be aware of the normal trend, slow trend. As the market pulls back in here, you already know you can cancel this thing out of your hypothesis. You know, you do your conclusion, and just say breakout pullback. Sorry, let's do this again. You can just say as a conclusion, what's my hypo? Only RPB above CVAL only, right? You get that? That's your CVAL. So straight away, you're only interested in return to value. You're not interested. You see, you've excluded. Whereas up till now, I've had you have this scenario where you, well, yeah, I've told you to be outside, isn't it? I've had you have this scenario below line in the sand, and I've had you had that scenario above, right? Now you can cancel this, but here's the extra thing I want you to now start thinking about is getting in. Think about it. If in this region here, you're gonna have to bear with me because this may complicate it for some of you. Hopefully, I just don't think there's an easier way to explain it apart from just literally tell it how it is. And I'm gonna go slowly, so you know, hopefully you understand what I'm saying here. Up until now, I've said only have you know, direction determined by your composite value area, high or low, and use it as a line in the sand. You can continue to use it as a line in the sand if you want. I got no problem with that, but you're now going to have to start thinking a little bit outside the box. And look, anyone's capable of doing this. Don't get too like, oh my god, it's too much. No, it's not. Honestly, once you've done this a few times, believe me, you'll be fine. Okay, it's just maybe the first time I'm showing it to you, you're thinking, oh my god, I've got to think about all these other things, all these different moving parts. Yeah, fine, but you know, you just got to deal with it. Basically, you can't change it, right? It is what it is, and if you get it right, the market's going to reward you. So you know, that's the silver lining, and you can get it right. Don't worry about that. You're going to get it. Like I said, just keep practicing. So what is this thing that I'm talking about? Well, up until now, I said when you're inside your line in the sand, you do the RPB, return to value pullback. When you're here, you do your breakout of value pullback. All right, so now what I'm saying is no, this can happen another way. You can also be here and do a return to value pullback, and this you can be there and still do a breakout value pullback. All right, absolutely crucial, guys. You understand this, okay? And you're just gonna. I don't have a perfect template for you where it says this is how you should write this down. No, you're gonna have to figure out. And the reason I don't hesitate saying this is because I know you'll figure it out. Let's be honest. This is more, you know, something to do more with how you organize your diary. You know, that's not. I'm not going to do that for you. Basically, I'm happy to show you how to, you know, perceive value and how investors perceive value. To write a diary, no, you got. That's your job, right? And I hope you see. I'm actually trying to help you. If I wrote stuff out for you, for some half of you, it's not going to suit you the way that I do it. Just, you know, come on. At the end of the day, it's not something that I'm specifically skilled in. All right, there's much better people out there writing things out and whatever. So, you know, you're probably better than me at doing that. So I'm not going to teach you anything. You're not going to get anything out of that process. You need to figure out the best way when you do your conclusion. What's my high post for today? Like I said, use the lines and ABC. Now it's open season, okay? You can now achieve a return to value from anywhere in your chart. I don't care, right? You could be up here and you're thinking, I want to start to attack and get return to value pullback. You know, or you can do your breakout of value pullbacks. I don't care at the end of the day anymore where you are. You need to be using this stuff. I'm gonna show you obviously that on a chart. But look, just to reiterate the point, You can be here and you could go either way. I don't care. You can be inside, so here, right? And I've said to you up until now, if you're inside, it's only what? Return to value pullback. I don't care. You can do a breakout value pullback from inside, because I already mentioned this to you in your value expectations framework, where I said if you're building value here above the POC, now imagine you've got this normal trend here happening here. Can you see that? You're gonna get this a lot. I can't tell you, it's not gonna happen every day, but once in a while it's gonna happen. That is your normal trend of your weekly developing value area here. Exactly that. Just imagine that point is that point there. All right. Can you see, if you're building volume here, the chances are this thing is going to fly. Why would you wait? Why would you wait for this to happen? Let me show you. Why would you wait for the market to go up, build value outside of your CVA high, and then say, all right, I'm going to get long? It makes no sense. I mean, it makes sense, but you're giving up. Your price risk is huge, right? From here to here, guys, personally, I'm probably got done and dusted for the day with a little piece left for me if I fancy going up. You're just entering where I'm probably already done. So, I'm happy to take on huge amounts of information risk, because actually, to me, that's plenty of information. I've got value building above my point of control. I've got what? A normal trend on my weekly DVA. Don't forget, we've brought in this new piece of information. And yeah, okay, I'm inside my line in the sand, which previously I would have said only if I'm above it do I want to break out a value pullback. But I'm saying to you now, just go with it if you want to. If you want to wait, nothing wrong with it, right? That's up to you. I've got no issue with it. But personally, I'm happy to enter there. I'll probably even add here sometimes. I'd be scaling here, see what the market does. If it starts to really, build some value and some sort of volume above here, bang, I'll enter in again, if I think it's really got legs. So hopefully that makes a lot of sense, that, you can now enter from inside or outside. And look, the other example is, and let's just do it here. So that's a breakout of value pullback from inside your composite value area, right? What you can also do is you can do a return to value pullback from here. Okay, so the market might have come down, and you've got your, just say that's your VWAP, and it starts to turn because the price starts to turn, and you've got this happening here. Look, you can see it came down, right? Market came down, the same thing. This is just your day VWAP here. Like I've said, this is your day VWAP. Then you get the turn, right? I don't care if the turn happens outside of your CVA. Oh, that's my point. Bang, enter it here. That is going to be a return to value pullback. What's the alternative? What have I had you doing up until now? Is waiting for it to break and then build some value, and then, no, I'm saying enter it early. Okay, because here you've taken on huge amounts of price risk. All right, you got this huge piece of information, but a lot of these guys, they're going to be scaling here, guys. You've got to realize that. So, for me, I'm going to enter here. Okay, return to value pullback. I'll just scale there. Take some scales. If you think you're worried, oh, I might bounce, and it could. Scale there, hold it. Personally, I'd be just going for this, right? To really take a return to value pullback, maybe towards the point of control or whatever. Again, why is that? Because I've said it here. Imagine this area here. You've got your normal trend over the past 2 days is coming in there, right there. Okay. I'm not going to short into that. If you want to short, sure, I just got you doing that to get you used to building hypos and etc. etc. Now I'm giving you a huge piece of information here that swing traders are gonna slam this, right? So that's obviously, your normal trend. And let's try and get this right. Market goes up like that. It's come back in, and then it builds value. Boom! You're gonna hit this to go back inside. So it's gonna return to value pullback from outside. All right, guys. I think I've pretty much made that clear. Let's now talk about prior value area. Okay, so this is, I can make this as complicated as I want it to be, but it's not going to really help in any way. I've said this many times. We can get as technical and mathematical, and even with the players, in the last section, I was saying we can go into incredible detail about, you know, styles, asset management styles of investment, hedge fund styles of investment. We talked about it. All the relative value, stat arb, global macro, all of that stuff, real money, pension funds, all the different strategies. I could sit here and talk to you, for hours about that stuff. Days, weeks, months, I could talk to you about it. It's not going to help you trade, okay? And the same thing applies here. I'm going to tell you very roughly why this issue has come about. So what it is a lot of investors, look, this is obvious. We've said the VWAP is the average. It's the most incredibly powerful descriptive statistic in the world, right? We went over it a million times. Whether you're looking at sports, markets, doesn't matter. Right? Forget about financial markets. Any market in the world, we've talked about it. Even salt prices, salt manufacturer, anything. What's the average price that it's been selling at? Am I above the average, below the average? So you've got to remember, firms also love looking at what was last week's average price? What was last month's average price? What was last year's average price? Are we above that? Are we below it? In the same way we're looking at the developing, all these guys, pension funds, all the guys we talked about, sovereign wealth funds, real money, basically, obviously at the sort of longer term investment horizon spectrum, hedge funds, asset managers, and then obviously the swing traders, and then obviously us, the locals, day traders, and then whoever. Basically, they like to look at previous period average, okay? And part of the problem with that is, so we've got the VWAP, but they also like to look at the standard deviation of last week, right? What was the spread? How volatile was last week? Part of the problem with that is using volume profile is, this is where I said we can make it as complicated as we want. Basically, we've got the VWAP, right? And the VWAP on the volume profile is there. You can see it, that the VWAP came and it closed. What was last week's average? We know it's here. So let's say I opened up this week. I'm here right now. So start of the week is, the market open, new week, and I'm sitting here and I want to know what was last week's average price. Whether I use volume profile or whether I use last week's VWAP, I've got it, it's there. So I can assure you, a lot of people are looking at last week's, last month's, last year, quarters, last year's VWAP. Again, it shouldn't surprise you. Everyone wants to know what was the average price last month, what was the average price last quarter. People are benchmarking themselves against that, or benchmarking the market against that, I should say, to see, are we cheap, are we expensive, all of that. It's just common sense, really. The problem is with the standard deviation. So the way that what I've done is, I don't look at these, but just to show you, I've put these here. Okay, the way that the standard deviation is calculated on the volume profile, and I've kind of hinted at it before, is it uses the mode. Okay, it uses the mode, and then it just gets you 70%, 68%, or whatever you want it to be. Let's just round it up. 70% one standard deviation, and it keeps going out until the 70% is spread out. And therefore, as it's going out, where you've got areas where there wasn't much volume, that part of the standard deviation is going to be allocated more volume. So that's why this will typically be wider than this. And there's no right or wrong way of doing it, but typically institutions do prefer the more traditional method, which is looking at the average, comparing the spread of values versus the average. So that's what they prefer, at least in my experience. So that's what I look at, is basically looking at the average value and then the spread versus each. And we did this with the heights, where we looked at each individual sort of outcome or data point, and we compared it to the mean, right? And then we did what? We got the variance, and then we got the average of the variances, i.e. the data point versus the mean. We got the average, and then we did the square root and all of that stuff to get you the standard deviation, right? And I'm just saying it quite sort of, quickly in the way that I'm saying it, almost dismissively, is because I don't want to get into all of that, okay? It's irrelevant. End of the day, we've done all the standard deviation stuff to death. My point is that if you use the mean as the point of reference to compare your spread against, or you use the sort of VPOC, the mode, you're gonna get differences. Is there really a right or wrong way? I mean, each has its, pros and cons. We won't get into it. Personally, it kind of makes more sense to use the average, but fine. That's why I look at that, and I believe, in my experience anyway, pretty much all institutions, when they're looking at sort of prior week, prior month, prior year, they're looking at these bands, okay? The standard deviation bands here, purely because the spread is worked out based on the VWAP, okay? Now, if you think about it, fine. So we can now start to measure this week's market. Where are we relative to the average of last week? Makes sense, right? Are we up? Are we down? Where are we compared to last week? Are we having a good week? Are we having a bad week? If I didn't have the average of last week, what else am I going to compare against? No Fibonacci and all that. So you already know that's all garbage. End of the day, it only makes sense to compare against the average. There is nothing else. The issue comes with these standard deviations, as I said. Now, if you're going to use the average, it makes sense to use the standard deviations calculated off the average. All right, end of story. That's what I use. If you want to use these, you can. I don't. Okay, to me, like I said, you need to sit down and think logically what makes sense. To me, it makes sense that this is what they're using. And look, at the end of the day, I have experience with institutions. I've worked with pretty much every client that you saw on the previous page. My experience is this is what they're looking at. So what I do is, right, I don't necessarily extend the previous week's VWAP or the previous month's VWAP or the previous quarter's VWAP. I keep an eye on it, I just eyeball it, but I don't, okay? What I do like to do, however, is the previous week's standard deviation, I extend it out, okay? So it's that, and it's that, okay? That's all it is. So can you see here, probably somewhere here, the standard deviation ended? You'll see another box. And can you see here, somewhere it ended there? You're going to see a box there. And I like to see where we are. Are we in? Think about it. Why do you think that is? What is this? It's ended. This is dynamic, developing. Sorry, terrible handwriting, but I'm just going to have to sort of put up with that if you don't mind. And this is static, right? It's finished. This isn't going to change. This VWAP value is fixed. The standard deviation is fixed. When we have composites, what do we use to say what is fair value of the composite? The standard deviations, CVAL, CVAY. That's all I'm doing. Instead of CVA high and CVA low, I'm just doing prior week's value area high, prior week's value area low. That's it. That's all I'm doing. Right? It's nothing like amazingly, mind-blowingly different to anything that anyone has ever seen or thought of before. It's just logical, all right? I'm just using the previous week's value. And this comes back to another reason why I like to use this, because do you remember we talked about the problems with weekly profiles? This is not one profile, it's two profiles, all right, guys? You've got to understand here, you're going to be merging these 2 days. Okay, look at that nice little confluence of value. You're going to be merging, probably not even merging this, because this will be like, not even a balanced distribution, and this will be a balanced distribution. This majority of this volume was probably built over that. You might merge it. I don't know. It depends where the RTH was. Maybe you might merge them. Okay. Point is, look, that's that. All you're doing is you've pulled that out and you've pulled that out. It's 2 merges. I don't want the sort of standard deviation of that, right? That's why another reason I prefer to just take the VWAP standard deviation bands. And instead of that being CVAH, CVAL in this way this is, it's just a different form of static value, right? Instead of me looking at a composite of 2 days, I'm looking at almost, you could say, a composite of the entire last week and using that as, if the market's in here, the week's in fair value. All right, guys, it's as simple as that. Okay, that's all I'm doing in the same way. Just think of this as one big composite for the week. And I'm just saying, if the market breaks out of here, we're having a breakout of value pullback with reference to what? Prior week's value area. Okay, so you've got CVA, you've got your okay, so this is where your prep is really going to start becoming not complicated, but have more facets to it. Okay, so you can start to see, I've given you this warning many times that I'm going to be chucking in different forms of value. You just got to accept it, guys. Swing guys, medium term swing guys, I can assure you, they're going to be looking at last week's average price. Okay, I don't think I know a single guy that won't know where the VWAP was last week. Everyone does, and therefore to me it makes sense. He knows where the standard deviation of the data that goes to form the VWAP is. All right, so you're just going to have to deal with it basically. And I did say this: financial markets incredibly complex. Wait till you see prior months value area, prior quarters value area, prior years value area. You're going to have to bring all these things in. And basically, just do it slowly. So, at the moment, start off with your day, your DVA, your overnight stuff and all that stuff that I had you doing. So overnight, and then, you're developing value areas you go throughout the day. Have your weekly now, DVA, all right, and have a thesis on that, which is going to be this as the week is developing. Okay, have your CVA. So this is going to be your developing thesis, right? And this is now going to be your static, which up until now has just been your CVA. You're now bringing in this, okay? So you're bringing prior week's value area, okay? And what would you say here? Breakout of value, pullback. The market is imbalanced. Look where last week was, guys. 70% of last week, right? I mean, you can see it here. Pretty much, that is a really sort of good approximation of where 70% of the previous week traded. Okay, well, that is what it is. It's a standard deviation of the week before. So ultimately, that's what it is. And where are we now? Above it. Okay, can you see the market's broken out and it continues to expand? So basically, we're now breakout value pullback. We're imbalanced when it comes to prior week's value area. I don't know where the CVA are, so we can't say. Weekly, it depends where we are. If we're here, we're in a normal trend, imbalanced, market condition, rhythm, DVA, similarly here. You get the picture, okay? That's what I want you to start doing, is bringing in this is new and this. Okay, so I want you to start thinking, where are we on, do exactly what you've been doing up until now, your overnight, your sort of intraday DVA picture in terms of market condition and rhythm. Continue to do your CVA. I've just added one bit into your developing thesis and one bit into your static thesis. That's all I've done. Okay, I've just added this prior week value area, which is just sorry, it's here, isn't it? Literally where the prior week's first standard deviation ended. Okay, that's become your new static, because this isn't going to change, is it? The week previously is over. It's the prior week's value area. You've already seen, you got prior day value area. It's no different, except we're calculating off the VWAP bands. And then we've got, what was it? The DVA. Okay, so we've got DVA, but this time is for the weekly. So again, you're already doing it. You know, don't get yourself into a twist and think, oh my God, I can't. You can do it, okay? It's market condition and rhythm. Just do the same thing, but instead of just for the day, do it for the week. All right, let's go and have a look at a few examples, and then let's get you started on this task. I'm going to show you, like I said, a week, just randomly pick. Let's go, you know, this is the, what is it, the ES. I'm going to look at on the market replay literally last week, all right? And I'll go through it very briefly with you, just for the sake of completion. So again, it's the 10th, right? Last week. So what I've done is, remember, I've done exactly the same thing in this. I've got no charts apart from, you know, for the market replay, to keep it obviously ticking over, take the template I've given you, delete all the charts apart from market profile. If you're looking at ES, market profile, one market profile, one day VWAP, and one weekly VWAP. You should just have 3 charts and save it as maybe ES weekly replay or whatever you want to do it. Right, and let's actually go and start the replay. So we're going to go to chart, replay chart. Okay, and date. So I want, what is it? Last week was the, let's do 5 in the morning on the 11th. Standard replay, all charts in the book, and just hit play. It's going to, because obviously I've got a live account, it's going to put me in the simulation. Okay. Now my charts are a bit messy. When I show you my full chart book with all the VWAPs, I will show you exactly how it looks, but for the moment, you know, you can arrange your charts as you want to. Okay, just give me a second. It's just loading. Just give it a second to load. And in fact, I had the wrong year in, that's the problem. You can see I've got 2019, it's a year back, so just bear with me. Let me just hit stop and reset. And whilst it's doing that, yeah, so just talking about the layout of the charts, look, don't worry, you might have a laptop, it doesn't matter. Once you've done your market profiles, you can minimize your market profiles, you don't need them. Just have your weekly VWAP up and your day VWAP. Just have the 2 of them, you'll be absolutely fine. So yeah, like I said, just get, you know, draw in your composites, get rid of this, and then just do your sort of hypos on these 2 alone. So it's almost loaded. I'll make sure I don't make the same mistake again. So let's go to that, and it's 2020. Hopefully this should work. So it's last week, it's just loading up the data now. So I'll just do the composites, and we're just going to do 5 days. And, you know, I'll just rush through them as I've been doing previously. You know, obviously I'm going to jump and we can just talk through them. Okay, so there's the composite. Yeah, so we've just opened overnight. Okay. Now I don't have the delta on here, so I'm going to pause this. Give me a second. I'm obviously going to pause the recording. I'm going to put all the deltas on and I'll be back in a sec. Okay, so you can see I've added them back in basically, so I'm just going to sort of minimize that. And look, I just want to repeat the point that I forgot to mention as well, that look, I'm going to do loads of like Zoom meetings where I'll be talking through a lot of this stuff, and it will be more kind of obviously trades that I've actually taken, and people will be obviously have the opportunity to ask me questions, and I'll put the recordings in this section somewhere, so there'll be plenty of material for you to actually see where I'm actually challenged on things. It's going to be much better if I just sit here and tell you, yeah, I would have done this, would have done that. You know, you're not going to get anywhere near as much as obviously where people are able to challenge me on things, and you'll see my answers to that, and that's going to help you shape your hypothesis much better. For now, you don't need more than what I'm going to give you, which is just telling you how to do the hypothesis. Like I said, you've done market condition and rhythm to death. It's all you're adding in, and then obviously the extra bit of static. So just to get you started, obviously we are going to look at it, but I am going to obviously, just in the interest of time, I'm just going to obviously try and go as far quickly as possible. Now let's have a look at this. So this is the E-mini. Let me speed this up a little bit. Let's check the time. Yeah, so it's pre-open, coming in pre-open. Just slow that down just a touch. Okay, so while that's happening, let's just see, is there any merges? Probably this. Probably merge that. Okay, probably all that's necessary for now. Would have merged those two, but obviously that's pretty decent balance. It's a grey area, okay? I mean, you could not merge it. I think it's a pretty good merge, because you can see what's happened. Those 2 days are not a merge, but then this has just built value on top of that, right? It's well inside. So, and this, all it's doing, you know, I've said this before, there's a gap here, and it's basically just filling in the gap, isn't it? So for me, it's a pretty strong merge as far as I'm concerned. Logic would dictate to me anyway. So I'm going to merge those two. Okay, so you've got your sort of value there. Again, you can draw in your point of control. Okay, so we've got that. So really, you know, you can minimize this if you want. Right, let's do that. Let's just minimize that. Then you can start to focus on your weekly. Okay. So you know what? I'll just be aware that, look, where's our sort of prior value? It's there, isn't it? 2899 and 2827. I mean, we haven't really come into the open. So again, let me just move this forward 12 hours. So what I'm actually going to do is, so you see the DVA, right? The part of the issue is that on a Monday, if you look here, can you see the DVA? It's identical. Basically, that is this. They're exactly the same thing. Let me just pause this a second. It's at 60 times speed. These two are exactly the same thing, right? So you're not going to be able to do the DVA piece for this on a Monday, okay? But what you are going to be able to do is look at this. Prior value area. So when you're doing your statics, right? Now, you can put the zone in here or don't, whatever. It's up to you. You know, I do and I don't. Sometimes I do, sometimes I don't. It depends on, if I've got time, I'll put a little zone in here. I like to do it. If I don't, then I won't. It really doesn't matter. Whatever. The point is, that's your CVA high. Now let's do sort of your plan for the day. You know, at this point, sort of here, you're coming in pre-open. What's your kind of plan for the day? Well, what's happened overnight? Overnight, you've really gone fast trend imbalanced, isn't it? Okay, so that's your rhythm market condition. Done, dealt with. So that's your kind of DVA for the day. Okay, the week we can't do it, right? So we just have to deal with that. So that's the day DVA. And look, I apologize, all right? At the end of the day, I hope the fact that I'm giving you incredible knowledge makes up for the fact that I'm terribly disorganized when it comes to writing. I'm the first to admit it. Sure, there's guys out there who are amazing at using all this Google Docs and OneNotes and all this. I see guys these days using. I haven't got a clue. For me, you know, even when I'm doing my effects that you see me doing in the Discord, literally you know, I got like a little pad. If you can see it here, I'll just write a couple of bits and bobs down. I don't even have a Monday, Tuesday. I don't, you know, that works for me. It probably doesn't work for 99% of other people. That's why you can't ever copy someone, okay, entirely. Obviously, I'm showing you a lot of the stuff I'm doing, and it's going to form, hopefully, good 80-90% of who you become as a trader. But, you know, a lot of that, it's going to be bits and bobs. In terms of I'll do a journaling section, don't worry. But in terms of the way I write things out, you're just going to have to accept I'm pretty useless, all right? In fact, even this is difficult for me to do because a lot of this stuff I keep it in my head or I just make really scribbled notes. Okay, I don't do all of that perfectly written stuff out. I tried at the beginning. I told you I prefer to have the printouts, right, of the charts, and I used to draw it on. So just forgive me, but hopefully this is plenty to get you started. And fortunately, since I've done the you know, I think it was task 4, task 5, where I got you on the hypos. I've seen the people doing them, and it appears that everyone's okay. So, you know, I guess people have managed somehow to make sense of the madness that I put down here. But there you go. So the point is, back to the point, weekly, you can't do the DVA stuff. So now we're going to move on to the static section, right? So we've got what? CVA, line in the sand. But the line in the sand is different now. It's not just, you know, so the line in the sand is fine. You can use the same sort of area, right? But we've also got now sort of 2900. See, around this area. Okay. There are ways where you can have this on here, and the problem is, okay, I go through phases where I kind of have tried to have this on here. Sometimes I don't. Problem is, you can imagine this is just the weekly. If you want to start putting your weekly VWAPs on here, you're going to have quarterly, monthly, yearly. It's going to become messy. You know, you're just going to have to get pretty good at just being aware approximately of where is sort of prior value area. It's about 2900. Okay, so it's about there. You can mark it if you want. You've got no problem with that. You can come up with different ways of doing it. You know, there's no sort of right or wrong. Just try not to be too messy here. Keep it clean. Keep this clean. Don't forget, this doesn't change a lot, okay? So you don't need to really worry too much about it. Just kind of eyeball it. I like to have it open for that reason. I know it's 2900 is the prior week's sort of value area high. So I know at the moment I'm having a breakout of value pullback. But we'll combine that with the composite value area. That's why I'm saying the line in the sand do you see the line in the sand? Because I'm bringing different components in, and I said to you this before, that this is the swing traders, right? Swing traders are going to be looking at this, and if we have an up move and we pull back, and obviously that's going to be value to them, and if that is also, you know, very close to this, clearly your line in the sand is going to be probably somewhere in between. That's all I'm saying. Now, this is where the whole, you know, and I said it a lot before, you got to be able to be discretionary about these things. And, you know, there's no rule book that says, oh, if the prior week's value area is within 5 ticks of the CVA high, then we call it confluence. No, you're going to have to apply your own discretion. Right? It's as simple as that. You know, you're in the wrong business. If you want specific rules, it's never going to happen. Because what if I tell you, it'll be unfair of me to tell you, oh, if it's 10 ticks above, then we call it confluence and we can say our line in the sand is somewhere in between. You know, if it's 10 ticks above, or it's 15 ticks above, or if I give you a specific number, say I say 10 ticks, what if one day you come in and it's 11 ticks? Do you see, it's ridiculous. You got to just kind of be a bit discretionary about it. In this case, in my opinion, 2900, 2890, you know, let's be honest, probably that whole zone is a good line in the sand, even including the, you know, this area here, 2900 down to here. So probably this whole region here, isn't it? So line in the sand, we can almost say something like maybe 2895, somewhere in that region, all right? But here's the key thing. I'm not going to be now saying, look, if you're obviously your prior week value area high is up here or somewhere or down here, your line in the sand is going to be different, right? I'm just saying because they're so close together, we can kind of use our judgment and say it's probably in that region. But it's no longer going to be greater than is breakout of value pullback, less than is return to value pullback. That's not going to work anymore, is it? Because what did I say? You could quite easily, if you had your, you know, if this was like the VWAP was down from the weekly, quite easily play a return to value pullback from outside, right? You could play a breakout of value pullback from inside. So you can't use these binary sort of choices. I made your life easier before intentionally. So you could do a, you know, 100 examples, get used to market condition and rhythm, and get used to developing some hypothesis. Now you've got to understand, I'm bringing in what? Medium-term swing traders, obviously guys using weekly VWAP. You're going to have to account for them, and therefore take it as a good thing. You've now got opportunity to actually expand your trading set, or your trading playbook, they call it. I don't necessarily like that word because, again, it tries to categorize things too much. I know people talk a lot about building a playbook, and I'm not a big fan of that. Keep it loose, keep it fluid, you know, allow you to react to market conditions. Sorry, I keep doing that. Just want to get rid of this. So again, let's just finish developing, right, the hypo for if you were here, your CVA, and then, like I said, bring in your weekly DVA, but not on a Monday, it's not going to work. And then now we've got this prior week value area, and we know 2900 is crucial. So that's kind of our line in the sand, isn't it? Prior week value area. I'm not going to write it. It's prior week value area higher. I'm not going to put this in my thesis. We're miles away, right? We're over 100 points away. It's irrelevant. So what am I thinking now is, all right, if I go below here, then, and in fact, this is how I'm developing my hypos. Okay. You probably see why I started to like drawing this stuff in after a while, and I wasn't a big fan of writing it, because how do I write out, all right, here, you know, one potential hypo is, would you agree? Look, we've just said that's a big line in the sand, because think about it. If I, so actually, give me a second, because we fast forwarded it, actually, if you think about what's happened here, we're actually here. Okay. If we go below here, would you agree? That gives me a return to value pullback, you know, to the prior week's sort of VWAP or the other side, right? So would you agree below sort of 2900, which is there, right? I'm gonna be interested in return to value pullbacks, but I've got what? I've got a problem because I've got my composite value area high. So would you agree? I don't want to be shorting here because of this problem. But I probably don't also, if I come into this region, want to be getting long, because underneath 2900, I'm going to be expecting a return to value pullback. Above this, I'm expecting what? Imbalance. Above last week's sort of value, right? The bulk of it. As soon as we break out of here, I'm expecting this market to go up. So in theory, what I could do is I could say, all right, where's that? That's about 2900. Above 2900, let's write it down. Probably makes sense for me, theoretically. I'm just keeping this in my mind before I write my conclusion. Possible breakout value pullback. Where's my composite? Is here. All right. Typically, the way the weekly set up kind of makes sense, right? Above here, for me to continue the imbalance from Friday. Look, Friday we went imbalanced, right? And then all it's doing is just continuing. Can you see that? That's all it's doing. Basically, we've gone imbalanced, we're coming back and we're pulling back to what? Last week's value area. Kind of makes sense. Let's continue to go imbalanced. It's a breakout of value pullback. Everything lines up for it to be a breakout of value pullback on the weekly. But I need to combine that now with my day and my CVA, don't I? What's my CVA telling me? Clearly above here makes sense potentially for me to be looking for longs. So, you know, if I'm here in the morning, would you agree, in this zone, I probably don't want to be doing very much, right? Because I'm stuck between a CVA high and a sort of prior week's static value, you know, where it's obviously sort of considering, should I continue to go imbalanced or not? So my conclusion would be, and look, at the end of the day, I don't have a crystal ball. My hypos are not cast in stone. Your hypo might be slightly different to mine. It's okay. It's absolutely okay. You're only going to learn by just going for it and then playing the market and see what happened. And that's how you learn. You know, I'm more than happy for you to show me your hypotheses, but also just do it and let it play. See how it works out. In my opinion, though, this is crystal clear. So my conclusion would be, all right, above, do you see, it's no longer one line in the sand, it's kind of here. Let's be realistic. Above 2900, happy to go long, given the right circumstances on my DVA. Below 2900, sorry, it's not 2900, it's this, 2890. To get short. Now look, I understand you've got the point of control as a problem, etc, etc. So for me, you know, my preferred, this is where I start to think a little bit outside the box. What algo is going to be able to do this? This is why algos do what algos do, and this is why we should do what we do. Develop hypotheses. They can't do this. You know, this is a strength that you will build over time. See, in my mind, I'll be thinking, all right, below 2890, yep, it makes sense, but hang on, I got this problem. What if the market was to be able to test this, come up, fail, and then there could be potential. I think above here I got a very strong opportunity to continue last week's imbalance anyway. To me, I'm biased towards that because what happened on Friday? What happened all of last week? Really, we kind of drifted up. I know this is discretionary thinking, but end of the day, that's what you have to apply. You have to kind of look for clues. The market's giving you clues. On Friday it's imbalanced up. You can't deny that it is. You got prior week value area high there. If we break down and we start to break up, as in we come down, we test this POC, and then we start to break up, you've got opportunities to get in long here, or you can wait for obviously this, which is what we got in the end. Fine, okay, that's how it worked. But the point is, you can develop that into your hypothesis, right? So this is why I just prefer drawing them out. I'm going to be honest with you. I find it very difficult to write all this stuff down in some sort of cohesive format. Honestly, I'm the wrong guy for you to be, there's much better people out there who are good at sort of writing things down in a journal manner and all of that. I'll show you what the journal stuff I was given, but for me, you've seen me in the mornings. I prefer to just say, yep, I'm here right now. What's my preferred hypothesis? Well, my preferred hypothesis is we come down, we kind of bounce off the POC, and then we kind of head back up. That's my A. Right, I've taken into account all of this. By all means, write it down, but then start to think about what your hypothesis would be. Given that I've given you this extra piece of information, if you're long biased, I would be quite strongly long biased in this scenario, unless, and that therefore it's going to be my C hypo. This would be my C hypo. Do you see it? For this to kind of build value down here, and then we can start to test this 2860 down here. So that would be my C hypo, but I would still prefer to be long. Okay, the thing is, I don't know exactly how the market is going to get long if I want to be long. So obviously I can make my best guess. It doesn't, either I can say, all right, it's not going to pull into the CVA and then pull out again. So, we can think of that sort of hypo. Or you guys have seen me in the Discord a lot. I will start my pilot position early because I don't know if any of this stuff's going to happen. But my point is, it's pretty much a similar hypothesis. Come down, look for some rejection, and then build value above here. And if you've really got balls, you can take it early there. What's the worst that's going to happen? You're going to get stopped out. Who cares? You've got some valuable information and the market didn't want to go up. You have to pay for that information, fine. And the reward is you get in that much early, you can start to scale, right? But anyway, I think you can see clear opportunities here, as part of your thesis, and using this to your advantage, the breakout of value pullback of prior week value area high. Hope you can see that very clear. As soon as we get above here, guys, there's only one way this thing's going. You're above, a strong composite value area. You're above prior week value area. You got your breakout of value pullback. You got two breakout of value pullbacks here and here. Where else is this going to go? Highly unlikely that this is going to come down, and these guys are going to get hammered, right? And that's what happens. And there isn't any clear targets. You can just target the other side of value as your value expectations framework. Obviously you'd be scaling probably somewhere here. Get long in this region. I don't need to show you exact areas. I'm very loose with my entries. If my narrative is this strong, does it really matter if I enter here, if I enter here, if I enter here? No, I'm letting my 90%. That thesis I just developed is incredibly powerful, right? Would you agree it matters, like, as you use the word gazillion as a kid? I don't even know if that number exists, but it's just infinitely more powerful to actually have what I've just built here, this hypothesis, this ABC, than, oh, should I enter here? Should I enter here? Should I enter here? Who cares? I really don't care, okay? I've shown you ideas about how you can obviously develop your entry. You can use order flow. By no means is it perfect. More than happy to have a look at it. Potentially, you develop acceptance above prior week value area high. Potentially go in long there, but the order flow wasn't great. This is the problem. Not all the time stars are going to align in the exact way you want them to. So you just got to decide. And at the end of the day, wow, that is some hypothesis. Perfect. I'm getting all the volume I need above, right? This going up. I'm going to get in the trade, and if we pull back here, below into my zone, this sort of zone where I didn't want to do anything, I'll just stop out. Fine. But the rewards are great. And actually, if it starts to really motor, I'm going to add. So I'll have this early position, I'll have this position, and my average will be somewhere around here. I can scale some out in VWAP, and I can hold the rest of it. Plenty of ways to do this, but that's what I would do. Hopefully that's really helpful. Let's move on, because that did take quite a while. So press play. Apologies, because I paused it, I think, for so long, didn't like it. So just give it a second to play. So again, I've said the point many times, but we're gonna do journaling. I'm gonna show you a journal, but it's gonna be pretty basic, and it's not gonna be something that I necessarily employ. I'll tell you what is actually really, really useful though, is journaling context throughout the day. Incredibly valuable. That is something I used to do. So at 10 o'clock, what's happened? What's the market condition? Has it changed? Has it given me the opportunity to get in? So, just monitor the market condition. Oh, it's 10 o'clock now. Yep. Oh, yeah, this is breaking down here. This fast trend is breaking down. The normal trend is breaking down. I'm now going potentially into, some sort of building some value above where the previous rhythm was. Good opportunity for me to execute my thesis, 10, 11 o'clock, etc., etc. Those type of things I used to love journaling, I must admit, because that's difficult really to draw every hour. It's more about writing 10 o'clock, 11 o'clock. It's just the initial thesis, because there's so many options. I prefer to obviously draw my lines, as you see, A, B, C scenario, etc. And I'm gonna be honest with you, I'm happy to do it. I do it in the Discord. Even the ABC stuff, I don't do it anymore. It's in my head. I know I want to get long, and when my opportunity comes, I'm gonna grab it. That's it. If it doesn't happen, I'll do something else. Simple as that. But we've said that level is obviously a long time away. In the meantime, develop your hypos, do the work. When you do the work, then obviously it'll pay off in the long run, and then you can also be much more relaxed. So this was the. So I'm going to just put this down to 1 time speed. Okay. Let's see if there was any opportunities here. Let me just okay, so at the start of the day, obviously we would have merged the prior 2 days, right, which would have been the Friday and the Monday, because we just finished the Monday, we're just starting this day, so it makes perfect sense. Okay, so coming into this day, sorry, wrong day. You see this day and this day that we just looked at, we're just merging them. Okay, so this is the day we're now looking at. There you go, the day's just started. So let's have a look at this day. Just get rid of that. Right, so at this stage, right, we haven't actually broken. So don't forget, 2900 is still there. Okay. Your prior value area high is very much still there. At this point in the day, you're here. Would you agree? You're very rotational. You know, what would you be thinking when you're coming in on your weekly? What's my sort of market condition? It's very rotational, isn't it? Look, we tried to do the rally on Monday, which we talked about the day before. It failed. We weren't rotational. So at this point in the morning, you know, you're probably expecting, let's be honest, I don't think it's unfair of me to say, you're probably expecting some sort of rotational condition. So it's rotational. What's the rhythm? Probably more like, what, 1.5, right? 1.5, 1.5, 1.5, 1.5, 1.5. You know, rhythm is very much 1.5. So that's your market condition. That's your rhythm. Again, terrible sort of diary or writing, but you know, it is what it is. So I've already done my sort of DVA for the week, right? You can do this in any order you want. Who cares whether you do that first or whether you do this first? It's going to make no difference, guys. Here we've got CVA high. Okay, so we've come in. Right, so we're going to now start with what's happened overnight, basically. Overnight, gone rotational, and we're starting to develop this. Obviously, you won't have seen this open, this sort of normal trend. Okay, normal trend, imbalance, right? Market condition, imbalanced, rhythm, normal trend. That's it. Always, can you see market condition, rhythm, market condition, rhythm? When you're doing the monthly, quarterly, yearly, market condition, rhythm. That's it. Okay, that's all it is. That's all there is to it. Overnight, we said normal trend imbalance, CVA, you know, 29.24 is probably going to be quite important. And I apologize, I haven't drawn the pocket. It's probably somewhere here. I'm not going to draw it in, but it's probably somewhere in the middle there. You've got your point of control. So what would we do here? We've already established this rotational, but this is, again, why the weekly is so powerful, and the other ones that you see as well. Because without the weekly, so far I've had you doing what? CVA greater than 29.24 would be, you know, potential for a breakout of value pullback, right? Well, if you didn't have the weekly, you would have taken that trade and got long, because you'd said, hang on, we've built acceptance above here, breakout of value pullback, it looks good, basically, it's good to go. Problem is, we're in a rotational environment, rhythm is 1.5, but pretty much there, right? I'll tell you 100,000,000%, I ain't going to be longing that market when we're in a rotational environment. It's the same, if you think about it, of having your DVA and saying, yep, NV, I'm going to get long here. You know you're not going to do it. You're rotating and you're at, you know, your rhythm. Why would you get long there? You're going to get short there. So you're going to get short. There's no shorting opportunities. In my opinion, at this stage. Sorry, just get rid of that. There's no shorting opportunities here because you don't want to really short into your composite value area high. Not at this stage anyway. You can if you want, but I don't know. I mean, I don't think there's enough, basically. Had this gone rotational and this was up here, I might have considered it and thought, all right, we'll play it back as a return to value pullback from outside. But it's not enough for me because at the end of the day, this could still very much, you know, it could continue to stay imbalanced, is my point. You know, there could stay imbalanced there. So basically, this is where you got to start thinking at this point. Okay, we're here. What's my ABC hypo? Well, I don't want to get long of this market, so I can't have a long hypo. Does it make sense for me to get short of this market, right? It probably does, because my Sorry. It's this pen. I'm just trying to get the right pen. Sorry, and the right sort of size. So my weekly is rotational, right? I've come in. I probably do want to short this, but it's not right here. Obviously, I'm imbalanced up. I've got my composite here. Bit worried we might bounce off here. What's a logical A hypothesis then? Well, clearly it is for us to break inside here. Because it's such a logical, in my opinion. Play the rotation and entry what? Somewhere when we accept inside. Would you agree? That's got to be your A hypothesis. I can't see any reason to get long here unless the weekly starts to go in balance, right? That's unlikely to happen till much later in the session. So basically at this stage, I wouldn't even be thinking about it. I'll be honest with you. This is where it used to help me writing things down every hour as context changes. Because when it got to 12 o'clock, 1 o'clock, 2 o'clock, and I saw this going imbalanced, I could change my thesis. At this moment in time, early in the morning, this is going to be my A hypothesis. My B hypothesis might be we come down, we have a big bounce, and then we come inside, right? That's a fair hypothesis, because we might bounce off our composite value area high and have a breakout value pullback, but we're not going to participate in that. Why? Because the weekly is rotational. I don't want to go long, as I showed you, at the top of it makes no sense, right? You've seen this. The rhythm, market condition in the weekly is that. There's the VWAP. Makes no sense. You're going to get murdered doing that 9 times out of 10. So clearly no interest. If this starts to go up, so my C would be, oftentimes what I do is I have a C hypo, but my C hypos are ones that I'm not going to take. It just means that, if it happens, I'm giving it an option to do that, to continue up, C hypo. I'm not going to take that hypo. That's my sort of hypo for me to step back and do nothing. So what would we do in this scenario? Probably, there's plenty of opportunities to short this market. Basically, as you come inside, you build some rotational value. There's plenty of shorting opportunities, in my opinion. That one's probably a bit difficult because it's sat on the VWAP, but as we poked out here, I mean, I can't say exactly where I would enter it because I'm so loose with this stuff. I'd probably be looking to short this market. I might even have got in here, might get stopped out and then re-enter. Who knows? I can't tell you. Do you see? This is why it's so much better, and I'm actually helping you by not going through tick by tick and saying this is what I would have done. It's nonsense. When I've actually had a day in Discord, trading, whatever, and then we do the Zoom sessions, it's there. You'll actually see what I've done, and you can actually see, oh, he's actually done it, and therefore that's how he would react in that situation. If I just show you here using market replay, tick by tick, oh, this is what I do, it's not going to represent how I would enter. Therefore, I'd rather you saw what I actually did, and then in the Zoom call we can do it and we can record it. So hopefully that's clear. That's the second day. Pretty clear in my opinion. Let's move forward. Sorry, because I took so long about it. Let's get that. So hopefully that's clear, guys, that being able to spot those, this is what I had you doing so many market condition and rhythm change hypos in task 4s and 5 with the CD. I hope you can see why now, because as soon as you see that on a weekly, you're going to be an expert. Oh yeah, I've seen that before. It's a rotational. Rhythm is about 1.5 SD or 2 SD or whatever it is, and therefore I don't want to be getting long into that environment, right? Which was didn't really want to be getting long. You can see it clearly. Don't want to be getting long into that. And then we just fell off the rest of the day, which is fine. So again, let me just forward this. You know, I don't know what would be happening here. That was obviously the sort of potential for that to happen, but that we discussed. But it happened so late in the day. I'm not going to be around, you know, to take advantage of that. So it is what it is, basically. Hence why I just skipped it. I'm just not even going to look at it because obviously it's quite late in the day. So let's have a look at this day. What potential was there on the Wednesday, midweek? Obviously now the weekly has developed quite a bit. Just make sure our profiles are up to date. Yeah, so we would have come off the back of that. So again, you know, first things first, we're here, right? Somewhere in here. I mean, this day was just amazing. Let's be honest. This day was brilliant. Just looking at the weekly, get rid of that. So where were we? Basically, overnight, we kind of had a slow trend failure, isn't it? Slow trend fail. So that's our daily sort of DVA, right? On the day, would you agree? Weekly DVA. What is it? Guys, you're coming into the market. Let's have a look at the time. There, right? You know, come on, you cannot say that at that stage the market is not, you know, giving you sort of imbalanced opportunities. You cannot say that. Okay, I mean it's about as clear a trade as you're going to get. Okay, you should be creaming this day. Basically, it's imbalanced. Right? What's the rhythm? It's a normal trend, potentially. We don't actually know until, you know, that happens, but you know, you can pretty much say that it's within that vicinity. Normal trendish. It's not, I agree, it's not necessarily established because you've just come down, but you know, what's the likelihood of us going back up there? It's remote. Let's be honest, this thing is clearly imbalanced. All right, you know, you've got to use your judgment and say, all right, that looks pretty decent for potentially some swing traders to come in and slam this market down off a retracement. So imbalance, normal trend, CVA, you know, 2862, decent area. This is where you got to start combining things. Is there pockets of value? Yeah, actually, old historic investors. I don't know where the CVA is from. Probably somewhere. In fact, let's have a look. It's old investors, basically, right? That have established value previously. Where are we talking? 5th of the 5th. Okay, it's that region here. Can you see? That's basically what it is. It's kind of that region there. It's this region here. So it's kind of that, okay? They've established value. Can you see? This is what I talked about with pockets of value. You've got to look for where pockets of value come together. Investors who establish value there, the fresh swing traders of this week, agree with them clearly at this stage at that area. What a golden opportunity. This is all my point is. When you're putting this hypo together, this is why I prefer to write it out, because you've got to start thinking, hang on. Yeah, that makes sense. 2862 is potentially where we go imbalanced, according to these historical sort of static value investors. So that makes a lot of sense. Okay, but my weekly's also going imbalanced in relatively same spot, right? So whatever that is. approximately what, this stage, probably that region there. Okay, we've come down, well, as in we're coming down, we've rejected that area coming into the open. Look, end of the day, what other sort of clues do you need? This is my point. It's like we've rejected this, we've rejected, you know, clearly the first standard deviation. We come down, we've got acceptance, you know, sort of dollar sign should be going off in your head that this is going to be a very good chance for me to short this market. You know, so you've got your CVA and then weekly plier value area. What's that telling me? Return pullback, perfect. I'm in the zone. You know, return to value pullback. Return to value pullback. Albeit you've already tested the other side. So I granted the move's already sort of done, but it's not like, my point is, it's not like that is sitting right here and you're slamming straight into it. Then I would say, hang on, there's a bit of dissonance here. There's problems. But there isn't. Nothing in your way at all. So what would the conclusion be? Well, rather than write out, clearly, if you're kind of coming into the market here, it's going to be hypo A, you know, either to bounce off that or do this again. You know, ideally you'd want to see what, some sort of retracement and then down. That'd be a hypo A, wouldn't it? And then B is really just going to be a variation, isn't it? Let's be honest. B is going to be, you know, whether it's maybe just a bit more aggressive. You know, everything is aligned here. It's really just everything. Because you think about the daily DVA overnight has failed. Guys, what else do you need? It's gone rotational. You know, you get that at the open, you probably want to be slamming this market, right? But how you get in, what you get in, I don't know. I mean, look, it's even the order flow. Pulling back, it's gone negative, it's pulled back to neutral. Is it really any surprise this has happened? Fine, we got this stop run. We come back down, and I don't know if you would be able to get short again or not. I don't know. Tough market, tough market. But you know, at the end of the day, it's gone rotational, right? It's pretty much gone rotational and given you, in my opinion, good opportunities to get short. Basically, very, very good opportunities to get short. Everything ties up, everything ties together. You know, your A, B hypos are down. It's nice. I like to have a C hypo, which I wouldn't take, but it just sort of keeps me from stopping being obsessed with my A and B. So, you know, if I get in the trade, it's kind of where would I get out is what I like to look at. And I kind of think, well, you know, probably anywhere above here or definitely above here. It doesn't, the trade doesn't make sense anymore. Probably even above here. So at this stage, you know, if we start to drift up here, I'm not going to long in a million years. I'm just saying that if the market potentially does that, you know, either I'm just going to walk away for the day or I'm going to shut down my A and B hypos. That's all I'm saying. So yeah, you know, again, I don't want to do the tick by tick. Oh, this is what I would have done here, and by replaying it tick by tick, taking trades. No, let's not get into all of that. I'd rather show you a day where I've actually been involved in a market like this. We can talk about it directly on our group Zoom calls, and obviously we can leave the recordings at the bottom. So if you're obviously looking at this further down the line, just check them out. We'll put some recordings in, and I'll obviously talk through scenarios like this of actual trades I've taken, which is going to be much more beneficial for you. But this is incredibly powerful as well. You know, start developing these hypos. You do the market replay. You got much more time. Obviously, I can only do a video. You got basically all day. You know, if it's a Saturday, Sunday, you can replay it. You know, get the screen time in. Keep saying it. You're very lucky. You've got, you know, the opportunity of using market replay to your advantage. So, you know, take advantage of that. Now, just give me a second, obviously, again, because I didn't let it play, even though I had it at 1 time speed. I just mean I took a long time to actually fast forward 12 hours, so it just kind of got slowed down. It just needs to load the next 12 hours. Give it a second. So what we'll do is basically we'll just finish off the week. We might as well just finish it off, and then you can go and do this yourselves. Let's jump forward another 12 hours. Okay, so that's the next day. Let's check the composites. Yeah, so that one I can't merge it with that one because it's still developing. So really I might be keying off, and let's be honest, it's not great value, but it's probably something like that. Prior value, isn't it? So, you know, again, this is probably one where you've got some, you know, pretty much, you want to be cleaning up on a day like this, to some extent, depending on, you know, how aggressive you want to get. So, you know, overnight, apologies, you've done what? You've pretty much going sort of normal to fast trend at this stage. You're imbalanced, right? Daily, deviate, imbalanced. Rhythm, it's not clear. We're just starting to establish some sort of maybe fast trend, potentially normal trend, although that wasn't really established until there, was it? It's more, it's imbalanced. Basically, it's clearly gone imbalanced. The rotation's failed, right? It's a breakout, and we've gone imbalanced. You know, this very difficult at this stage to say, because you've got to remember you're here. Very difficult. Weekly DVA, easy one, same as the day before. Whereabouts are we? Somewhere in here, you know, somewhere in here, you know, pretty much it's been given to you on a plate. You know, because don't forget, you've gone in balance out of prior week's static value as well. So let's just say it's imbalanced, probably more like a normal to fast trend. You know, obviously you're probably just closing here as you get in. That's okay. At the end of the day, you know, you've still got plenty of space to your second standard deviation band. So something like that makes a lot of sense. So contextually, on a developing basis, clearly everything points towards short, right? Imbalance down, imbalance down. Does our sort of static value allow us to play that? Well, ideally we want to, you know, I said to you before, you can look to do breakout value pullback plays from inside. You know, nothing wrong with it. This is clearly a very, very strong sort of reason to do it in, right? You've got what is it, about 28.30, you know, so it's miles away, it's up here. So great, you can see here, we've essentially, so let's do it. So CVA is what, 27.86. Can say, you know, potential breakout of value pullback. Okay, but you gotta be loose with this now. It's no longer only when I'm below, only when I'm above. Work your hyper how you want. You know, me personally, let's say, and theoretically, I think, nah, do you know what? We rejected prior week's value area low. rejected it overnight. You know, we've got an imbalance that was rotational, the rotation failed. We've got obviously a weekly that's imbalanced, normal trend. We've pretty much at the line in the sand. You know, we're building value here. What else do you need to get you to get short? You know, if you're looking for perfection, again, I don't mean this patronizing way, but you're not going to find that in trading, okay? Ideally, I agree with you. We want this to do this and do this and show clear acceptance and have a perfect thing, and then we go down. It's not going to happen, right? You have to kind of use your discretion and say, yep, my 90%, look at it. I mean, come on, the 90% is perfect, right? You've got your the four things that I want you to do: the DVA lined up with the weekly. You've got your CVA pretty much on the cusp, or at least not really looking like it's going to be sort of rejected. We're building value around it. You've got your prior week's value area, which we clearly rejected, and we've gone in balance on the sort of prior week static basis. What else do you need to get short? I mean, you should be all over this, really. How far down it goes, who knows? Ain't got a crystal ball, got no idea. I'm not going to deny that potentially, there was a shorting opportunity here. Obviously, fine, you get stopped out here, you get stopped out here, whatever. You get stopped out, and that happens. And then, you could potentially sort of play this back. I don't know. For me, it's too close to the VWAP. I'd have wanted to get a little. I'd have wanted my CVA to be around here, a little pullback, and then potentially a rotational play, a little bit more advanced. But yeah, it just wasn't right, was it? It was at the VWAP. It's a bit risky. But yeah, to me, huge shorting opportunities in the morning, the market to go short. So hopefully that's clear. And I didn't actually draw the hypos in, but that's what I would have done. In the morning, I would have done the hypo like that, and I would have put in my A, B, C scenario according to what I've written down. So instead of having a conclusion, I'd basically just say, right, we're here, and what do I expect to happen? Well, we could either come back to there, which would be ideal. That'd be my A hypo. A's are always my ideal. They happen about 50% of the time. You're not going to get that pullback most of the time, at least half the time. Or I'll go for my B. B's tend to be the ones where and you've seen in the Discord, I post them all the time. That's what the B's are, where they don't really pull back, and I just have to go with it. Look for early signs, and you won't be surprised to see me do this because I've done this now on all the other examples. C is, it just doesn't work out. That doesn't mean I'm going to get long if this. I have no interest in getting long of this market. It's if I'm in a short and we start to what? Build value above here, obviously I'm going to think about getting out of the market. That's what I'm saying. And then go and do something else, right? Unless I see something here where I think, okay, we might have a breakout again. So this, you could argue, is kind of like a breakout of value pullback from within, right? As the Heiken actually turns, whatever. At the end of the day, like I said, be loose about it. Don't be so strict as I'd asked you to be before. Now you're going to have to see, oh, actually, am I in a normal trend? Makes sense for me. Just go with it. Okay, and then final day. Hopefully it doesn't. Yeah, that was high, wasn't it? Okay, so this is the final day. I believe it's this and this, because this is still developing, isn't it? You can probably see me looking a lot at that weekly. Even where I've just stopped and I've just thought a few times over there. It's what it is I like to look at the high time frames first. I'll be honest with you. I like to look at them. It kind of keys me off. Like, what I'm going to be doing today? What the big guys doing? What are they looking to achieve? That's just how I do it. If you want to look at the overnight first, absolutely no problem. It would take not 2 minutes, but it takes, maybe it might take you half an hour to do your prep, 45 minutes, whatever. I get that. But eventually, it's going to get to the stage where you'll just see it and you say, all right, well, what's kind of happened here? Clearly, the imbalance is breaking down. The market doesn't want to be imbalanced anymore. We're on a Friday, probably some profit taking Friday of the big move. That's a little bit more advanced. But look, clearly, we're building value above last week's prior value area high. Guys, you might be thinking this is a lot of information to take in. Wait till you look at the monthly, quarterly, yearly, all right? A, and B, don't worry about it. Once you've done this stuff like 1,000 times, it just be natural to you, okay? It's just the first time you're seeing it. You might be thinking like, oh, it's way too much information. But look, don't worry. Once you've done it a few times, any of you are capable of doing this. It's practice and being able to, kind of in your mind, see where the pockets of value are, right? I agree, not everyone's going to be able to see that. But I do believe with enough practice that, it's doable. So just get the practice in. Just keep doing it. This is the last day. Might as well just do it with you. We've come in. What's happened? Imbalance down. Rhythm. Normal trend. Okay, weekly. Don't forget, these are the DVAs in my rubbish style of writing. It's terrible, but it is what it is. What's happened here? It's failed, right? It's clearly trying to go rotational when you're coming in here. It's clearly trying to go rotational. Possible rotation, imbalance, fail. I did say failure is a big clue for me. If this imbalance is failing, got to ask yourself why. And then CVA, probably look out for here. Actually, this is a really good. I want to bring in the point of control here. Where is it? It's there, isn't it? 28. That's why. I hadn't seen it, but I had a feeling that obviously it's in the middle somewhere and we were building volume above it. I can't remember what sort of value expectation I gave it, but you saw it. When you're building above here, you can get long. So, there was potential early doors here for this to be a breakout value pullback. But let's finish why we think that is. CVA basis, nothing but pocket. Clearly that's important because you're here, right? You don't necessarily want to be trading right into it if you do scale it, but we already know we're not interested in shorts because it just says DVA weekly, possible rotation imbalance failure. And finally, what prior week's value area is, just have a look where it is. Probably around 28, 27. Somewhere in that region, right? Approximately. Look, I'm going to be honest with you. At the end of the day, it's clear what the hyper should be to me. Hold on. You clearly want to buy this market. How are you going to get long? Well, we know value expectation. If you're building above, I want to conclusion. you know, if we're here, my ideal hypothesis is going to be build some value above here, come back, and then look for, you know, maybe test this or test that. That's going to be my A hypo. My B, as I said, typically I'll always have it as a hypo that it's the same as A, but it's more aggressive. So, you know, we're here and I just go straight up, basically. Okay, no sort of retracements, no real opportunity unless I just go with it. That's typically my other scenario. And then, of course, the failure scenario. Typically, that's what I'm doing. You know, I'm not going to necessarily trade that. I don't think so anyway. I'm not sure if I would trade that. In fact, I wouldn't. Be my C scenario. Again, sorry for the handwriting. But hopefully that is clear. You know, when you put all of this together, let's just finish off this prior week's value area. So it's somewhere there. So potential, I would put here potential return pullback, return to value pullback. Return to value. Look, when you put all of this together, it's clear this market wants to go up. How you get in, I don't know. You know, for me, I might have got in here and got stopped out initially because I might have been worried that, oh, you know, the sellers came in there. Let's have a look at Delta. And Delta's pretty much showing that this was nothing more than a stop run, isn't it? If you look here, it's like that. This was a stop run. They stopped people out, and then boom, they just went up. You'd have to chase it. You'd have to, you know, as it starts going up here, the stop run happens. I probably would have got, you know, long in that region, only to get stopped. I would have probably just clicked myself out, maybe. And then as it came back, I would have got in again. I would have got in again. And then, you know, just taking the trade up. It's long. It's a difficult one because even here, if you get long, you're trading straight into the VWAP and whatever. But in my opinion, it did give you some really decent opportunities to play this A or B hypo. Alright guys, hopefully that's clear. And that was helpful to give you those examples. So let's just sort of recap. What you want to do is daily, so that'll be your overnight DVA, weekly, developing value area. So with this, it's just what? Market condition and rhythm, market condition and rhythm. And then you've got your stuff with the static that you've been doing anyway. You can have a line in the sand, but it's going to be rough because you might be going to break it. I don't know. You see, it depends how everything is set up on the weekly, and then you've got prior week's value area. And then your conclusion is your ABC scenario. You know, you can write out if you want, but it's got to be ABC. All right, guys, I hope that was useful. This is basically the whole week I've just covered. Yeah, do that. That's your next task now. Spend ages on this. This is really something you need to master. And all that I'm going to do now, and I'm not going to do it in much sort of in-depth detail similar to this, is I'm just going to bring in the other 3 VWAPs now, okay? And it's going to be the screen time. And also we'll do sessions and obviously show you the stuff I'm doing, Zoom, like I said, or whatever. It's going to be the screen time. Really, that's going to, and doing hypos every day, posting them. I want you to post them in the Discord, especially if you're trading the live market. You've got your 10-minute delay probably with the data, that's fine. Just post them with your 10-minute delay, absolutely fine. Approach the market as if you're doing it in real time if you can. If not, it's fine. I've shown you the market replay. Obviously, that's what I was doing here. You know, I understand a lot of people have commitments and stuff, and look, at the end of the day, it's perfectly possible, you know, to learn the material doing that or not. I'm just saying, if you have the opportunity, you know, and you're sitting around and it happens to be, you know, RTH Open's about to happen in half an hour and you've got the time anyway and you're replaying, shut it off, do the actual market and start posting it in the Discord and saying, coming into this session, this is my thing. I'm just saying other people can look at it. Obviously, I can't look at it at the open, pit open. You've seen me. I'm trading serious size. At the end of the trading day, I will have a look at it and we can have a chat about it and, you know, see where you did it right or did it wrong. And, you know, a lot of the times it's going to be very subjective anyway. So, yeah, look, do that into these categories, then do your hypos, and let's see how you get on. All right, thanks. See you later.